we do have a hard sell-off, we'll be around 65.83. I mean, we got about another 100-point drop in the S&P before it even gets close to the 100. And then from there, the 200 was all the way down to 64.13. And so just a lot of air in the market if we close below the 50 for the first time. And that's really good information for us to know. So let's do a video on this real quick, just to get a scope on how you can look at, if you have a stock portfolio and you swing trade, or if you're a longer term investor, or if you're a day trader of the futures market, how can we look at these daily charts and this 2-hour chart and determine our bias for that market? So this is the S&P. So let's go over this. Gerald's now recording. So I want to go over this real quick. Like I said, there's no magical moving averages in the market. There's not one that's better than the other one. So what you can do is you can put like I said, a 9, a 50, a 20, 100, and 200. I have EMA, but you can also do simple. I mean, there's not much difference between them. And so you put those on a chart, and it gives you a really good feel for the market environment that we're in right now. Now, like I just discussed, we're in there's a lot of catalysts for the market that's ongoing right now. The government just opened back up. When they shut down, created volatility. Interest rates have been declining, but now the talk is that the Fed is done easing as much, which is bad for the market. So we want a lower interest rate environment. Obviously, that's a great catalyst for the market to move higher. So, and then we got like I said, the tariff situation with China. There's just a lot of catalysts in this market that's pushing it around. So what happens is that with all these different news events that's been hitting the market, and this is going to continue all in 2026, the volatility is going to be really, really, really volatile. So, but you could see what direction the market you're going. So let's say that you are a stock investor or a stock trader, you want to see what the daily, let's say you're buying, whether you buy AI stocks, or I know quantum computing has just got, they all went up so much. I mean, now they're getting the air taken out of all of them because it's still off. Quantum computing is a 2030, 2035 thing. So, we're still 5 to 10 years away, but some of those stocks ripped higher, and now they're all just getting taken to the woodshed. So that creates volatility in here. Or if you look at the rare earth mineral stocks, same thing. If you're a buyer on dips because of national security and so on, we want to try to keep things in-house in the U.S. and we don't have to depend on China and importing lithium and all these rare earth minerals. It creates a national security issue. So, those are stocks, if you want to add to those in your stock portfolio, when's a good time to buy those dips? Well, you want to look at a daily chart if you're doing that, not only on those individual stocks and the futures market. You can see what the overall scope of things are, because right now you can tell that the S&P, if we look when it first started its uptrend, a good barometer of it, and a lot of hedge funds use this moving average. They use a 50-day moving average, and if you're above it, it's bullish. If you're below it, you're bearish. I mean, it's very simple. It's not very hard concept to understand. There's no magical MA, but typically the 50 is where this thing started to really get going on May 1st. We've had a nice run. So May 1st, if you look at what's happened, we've never closed below the 50, the blue line there, never closed below the 50 MA at all. We close intra candles don't count. Those are stop hunts. So we did it last week. I talked about this last Wednesday. I talked to traders. We come down here and we get our algorithm that turns up around 6,700, 6,670, because they like to bring it below whole numbers, about 30 points. And then we get a buy signal. Then we could have some opportunity upside, and we did. It came down to 50, and we had a lot of buying opportunities with our algorithm. So we're in the same situation today now. I mean, if you look at it, the market is right at the 50. We have never closed 2 whole candles below the 50 moving average. But so if you look at it, I mean, gold's over 4,000. Silver has went since 2020 from $12 to almost $50 an ounce. I mean, we're in an environment where the stock markets went up so much but all these different variables are telling you that we could have it could be a nice healthy pullback because of gold, silver up, markets run hard, valuations. If you look at Warren Buffett and so on, a lot of cash is now on the sideline. I mean, tons of cash because this market is in a very critical level of valuations are now high. So, we could have a drastic pullback. If we get a drastic pullback and you own a stock portfolio, you don't want to be buying when you're way above these MAs up here. You're going to get caught, if you want to buy the dip. Long-term investors, they like to buy the dip, and buying these dips on these MAs are a great way to do it if you want to add to your positions. All right, so let's talk as a day trader then, as far as futures. It lets you know what type of environment that we're in. So this is a daily chart. So it's something you guys should look at on just a glance at it on a day-to-day basis. It takes a half a nanoseconds to see what environment that we're currently in. And we're selling off, right? I mean, the 30-day, 50-day moving average, EMA, it's below it right now. So we're talking right around 30, 67.30. And we're down to 81 right now on the S&P. So we get a close here, and we get a retest of 67.30 will now be resistance. We get a 2-candle close. They may take the air out of the market next week some more. So that's good information for us to know because we know our targets. Our targets would be naturally the 100 down to 85, and the big drop in the market would be down to 64.13, down to the 200. And you don't think that's viable? Well, it can be. You could see about a 300-point hit in the S&P if that happens. So, we want to look at the daily. Now, if we're trading intraday, so that's and you can do this with crypto, you can do it with currency, you can do it with stocks. I do it with my stock portfolio. If you do it with cryptocurrency, you want to see where you're at. I always like to buy dips at these big moving averages, and I look at it as far as individual stocks, and also the index is a major player. But let's say you're day trading the ES or the ES micros. A great way to do it is you can use those same MAs, and I'm going to show you right here's where our algorithm picked up two big shorts. So our algorithm picked up two big shorts right here yesterday. It picked it right at that retest, and I'll show you. And it picked up this big short here yesterday too. And it picked up these big longs. It picked up a big long here. My algorithm caught this retest long off of the 20 MA, and we had a big move to the upside too. So I'm going to show you what you can do by just taking a quick look at the market direction. So this is a 2-hour chart, same MAs. Like I said, there's no magical MAs. No one can tell you that there's this magical moving average crossover system is amazing. There's no moving average crossover system that works, because in trend markets it works, and in chop you'll lose everything you made in trend. So you use them for support and resistance and all overall direction. So the same MAs, 9, 50, 20, 100, 200. EMA are simple, doesn't matter. Now, if you look, this is a 2-hour chart. So it tells you that on November 10th, that's when it started to really firm up. So your bias on our algorithm on any yellow trigger entries off of our 30-year trend zone, you want to trade green trend with our 30-year back-tested trend zone, because our trend zones been back-tested for the best trend to reverse price on the S&P. So if we know that, and we got 30 years of data that tells us that is the best trend filter, well, a daily and a 2-hour chart will tell you with just simple MAs if you're in the right direction. Well, this is a bias. This is when you want to see our trend filter turn green, and you want to get in with the overall push. This is a great level to get long, right? So now we're in an environment of what? It all started right here. The close back inside of the 9 and the 20 MA. This candle started yesterday at 8 o'clock in the morning. 8 o'clock in the morning, I'm going to show you how our algorithm picked this up also. But that close on the 2-hour chart suggested what? It suggested to us that the market is now closing, the candle close, not the wicks. The wicks are stop outs. That's for amateur traders. Traders that trade off wicks, that's amateur trading. If they're trying to look for breakouts on wicks, you got to look at the open versus close. So the close of the body got back inside of the 20 and also of the 9 moving average. And that was what started this big drop. Then it closed below our big barometer, the 50-day moving average. and it retested almost to the tick on the 50 yesterday on the 2-hour chart, and that's exactly when our algorithm fired inside of our sell zone. I'll show you in a second. So since yesterday at 8 o'clock, if you're trading our algorithm, then you should be shorting the market. If you're going with the trend of the market, because a lot of traders, what they'll try to do is they'll use all these indicators. There's thousands and thousands of indicators. And to me, 99.9% are worthless, because what they try to do, they try to catch this low, try to catch this low, try to catch this low, try to catch this low. You're trying to, what traders do with all these indicators, they try to catch the falling knife. Well, we're a little bit different. We want to short low and cover lower. That's order flow, short low, cover lower, because what the market likes to do, it likes to find fair value. It always tries to find the next fair value level. So we'll look at my fair value levels today and our targets. We got some more downside today, and I'll show you in a second in this video. And consequently, I'll show you the 5-minute opening range technique that I like to use at 9:30 today, and I'll show you the 30-minute opening range technique to show you the bias of the market, to give us where they like to, where the fair value of the market is, and how we can trade off those zones also. But this is a great way to get the bias. Right now, we're in a negative environment. I mean, this is a 2-hour chart. We had our fun to the upside here since on 13th, right? November 10th, 11th, 12th. So we had 3 days of bullish upside. Buy the 25 liquidity grab zone, buy 25, buy 20, all the way up. Now it's short the retracements into our liquidity grab zones. The bias is down. So it's a great way. It's easy. Just put these two charts up and save them. Put them beside each other, and you'll get a good feel before even looking at the intraday charts. What I think traders do sometimes, if they're trading futures intraday, they lose the whole scope of what's really internally going on with the market. This is all the information in the market coming out, spitting it out into a daily chart or a 2-hour chart, and we can see that we're going lower right now. I mean, it's obvious that the market is under pressure since 8 o'clock yesterday. And how do we get in now? How can we get in knowing the big macro point of view is lower, meaning daily chart and 2-hour charts lower, just using those simple MAs, right? And now we can go into the algorithm and say, okay, pinpoint the exact possible turning point where we can get short or long. And I'll show you how we do that. So that's a good start. So get those off there. So now we know in a downtrend, well, how far can we go? What does this market like to do? This is where a market profile comes in really handy. It tells us where these next value levels are, meaning the market's always looking for fair value. If the market was chaos, it would be up and down 1,000, 2,000, 3,000 points a day, but it's not chaos. It's very orderly. So what it does, it finds the next value area. Where is the next value area for these markets? So if you look today, the value area was the low value area back on November 7th. Now, we don't use 30-minute market profile per se, because it moves too much. We like to use our 2 to 4 hour rolling profiles to find out these big levels. So our big level going into today was this level here at 67.04 3/4. Now, what's interesting is, to show you how important these levels are, I mean, what did the market do? The market, what it did this morning at 7:30, it cracked below low value area, because when you're in between a high value and low value, this is a balanced market. And this is not my opinion or your opinion. This is order flow. This chart's all order flow. It has nothing to do with where we think the market's going to go. The market's telling us where the order flow is. The order flow is going southbound on the Greyhound, right? They're trying to short the market. Every rally, they're grabbing liquidity, taking the counters out of the market, bringing it back lower. That's what the smart money does. It likes to prey on the traders that are not knowledgeable enough to understand about liquidity. And liquidity is very simple. If you're in a downtrend, they're going to rally it back up, grab liquidity, and bring it back lower. It's that simple. So if you look, what they did is they did exactly that. They caught the shorts right there. They caught them, brought it back up, grabbed more liquidity because they know they broke the low value area. Then they caught the counters. A simple break retest, and this started the big move down to our price profile. Now we got a little bounce, but it's just a bounce because now once you're outside of high value, low value, what's this? It's called you go from a balanced market. This is balanced. And this has been working since 1985 with market profile. Thank you, Peter Stoudemire. Very simple. This is order flow. This is how order flow works. So we go in here. That's a balanced market. Once you get outside a low value area, it becomes imbalanced. So that's a balanced market when you're between there. Once you get outside of a balanced market, the market becomes what? Imbalanced. And when you become imbalanced, you have unlimited move to the downside. So how can we find our targets then? Where can this market possibly go? Well, when it becomes imbalanced, then what we need to do is we need to find where's the next fair value area. Where can this market find next fair value? So I just showed you how we can use a daily chart, a 2-hour chart, and market profile. And I just told you the whole backdrop of the market just like that. And it takes a matter of seconds to see it. By looking at a 2-hour chart, just like that, we're in a downtrend. Very simple. But you can't trade off the 2-hour chart. The stops are huge, right? You can't trade off a daily chart. Now we're breaking the 50-day moving average right now. The stops are huge. So how can we pinpoint getting in? That's where our algorithm comes into play. And where's our targets? Well, our target's going to be, the market's going to try to find value now. So it's going to try to find value. Where's value? Previous market profile. So it's going to try to find value right down here at the 55.5 level. And if it breaks that, this market should really come down to that daily level of, what was it, 65.87 is the 100 on the daily chart. So that's how we do it. Now, how can we pinpoint entry? Let's go over it. So let's go back to our chart and see where we started our downtrend. So we start our downtrend right here just by using a simple 2-hour chart. Very simple. Pull up a 120-minute chart, blank chart. Like I said, no magical MAs. Just put up a 9, 50, 30, 20, 100, 200. Very simple. So we close inside right here for the first time, and we start closing inside. See, it's straddle, 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 straddle. Whole body candle close inside of our 20 and our 9. That suggests that this market's going to get possibly taken down yesterday at 8 o'clock. And then it finally broke the 50-day moving average, retested it. And I'll show you how our algorithm picked up this short and picked up this short. And how our algorithm this morning, since we're way away from these MAs and we're still going down, it picked up 2 shorts there and 2 shorts here because you're going with the push of the market. Okay, so that's the big picture. Let's go to the small picture. Now we can break it down into smaller charts. Now our smaller charts, let's take a look at it. So now we're looking at our smaller charts because now we're looking at the micro point of view and we're saying, hey, let's see where we can get short because the market is what? The market is in a downtrend off the 120. Look at the retracement sell. This happened. Here's our first sell signal that came this morning. The reason this turned yellow trigger, it got inside my 30-year back tested zone. And this happened right at 7 o'clock this morning. So there's your first possible entry. Then it came back up, got inside my zone again. Remember, this is a 30-year back tested zone where we already know our bias. Our daily and our 2-hour chart told us the bias is down. You know, the hedge, the banks, all the smart money's pushing this market down. So we want to use our micro charts to fire in shorts. Another short. Then it came up to my 25 sell zone, these 25 sell zones, because now we got our bias. We have our bias. We know we don't want to look to take buys until we structurally get up on the daily chart or the 2-hour chart. We're just going to take sells because now we're with the push of the market. Right to my 25 zone. My 25 zone, this is our proprietary zone we use. This is called a liquidity grab zone. You got 3 trades in the row that have now called the high of the market. Your entry, the reason it didn't turn yellow trigger, because it got closed above our trend zone. But as long as it doesn't close above the line in the sand, the high of that 25 zone, it's going to be a short. It does not. So there's your another opportunity this morning. There's your entry. And the market gets cranked again. Big push to the downside. So now, once again, it came up again, and it never got to our 25 zone, never got yellow trigger, so this is not a trade. We don't take this. We only take a trade if we get a yellow trigger or we get inside the 25 sell zone. So our next 25 sell zone is coming up, and it's conducive to a great trading plan because we're still below low value area. Now, yesterday, I'm going to show you when this first started to fall off on the 2-hour chart right here. So let's go back yesterday at 8 o'clock in the morning. How can we capture this? How can we capture this type of move? By you looking at a smaller chart. How can we capture that type of move? All right. How can we do it is we can use our algorithm again. We can use our 30-year backtested zone as a reversal point. Let's go back to 8 o'clock yesterday morning. So if we look at 8, that's the retest. That's a close below it. Close below here. Right there. Close below. And saw that big decline, and our algorithm picked it up. Right there. Right inside. Now, this is confluence because it's a yellow trigger entry, so your speakers go off when this happens. Have your speakers turned on. I like to use wave file 4 for a nice beep. Gives you a sell arrow. We're with the trend because we're with the 2-hour chart using just simple moving averages. We're with the chart. It broke down. So we're going with the push. Now we're using a micro entry by saying, hey, let's get into my 25 zone or my yellow trigger if it comes inside for trend zone. Our trend zone's red with the daily push so that daily and the 2-hour push, 2-hour chart right here. 1, 4, 6, 8, 12, right? 14, 16, 18, 20, 22, 24, 26, 28. So the last 32 hours, you should be short in the market. No buys. 0 buys. 0 buys. None. Forget about it. If you're a stock trader, 0 buys. If you're trying to add to a portfolio and you're trying to get a dip, to buy dips on whether you like NVIDIA or AI stocks or you're an IBM trader or you're an Amazon trader or you're a Google trader or you're a Microsoft trader or whatever you are, this is the worst time to add dips, right? So because you're in a hard downtrend. Wait till it comes down support off a daily, then we look to doing that. If you're a futures trader, same thing. No buys. You don't want to catch a falling knife. So what you do when you see it breaking down on this 2-hour chart, let's go. Let's go to our small charts. Look at how our algorithm picked it up. Right there, 8 o'clock in the morning. And it started the big plunge. This is not a trade because it never got inside. It's got to get inside one of the two. It's either got to get inside my 25 liquidity grab sell zone here, or it's got to give me a yellow trigger entry. That's all we can do. That's all we want. We don't want to take this reversal candle here, even though it worked out, because it's not a deep retracement. I want to get inside my sell zone and stay in there and reverse, and the algorithm will automatically print a yellow trigger for your entry, or get inside the sell zone, right? One of the two has happened. Now, if they both happen together, you have confluence. So you want the market to retrace inside that sell zone right there to get confluence like that. That's a beautiful trade. And that started at, the short entry on that candle close was 63 and a quarter, and it got taken to the woodshed. It dropped 22 S&P points within an hour of trading. But look, we come back up again. Beautiful entry again. That happened yesterday, right at 9:28 before the market opened. And then you can't take this one because you should be already short there if you wanted it, because it didn't get inside the yellow trigger or the zone, and the market just got taken to the woodshed from this earlier sell. Look at that earlier sell. Because your stop's above, if you're trading off this 135, your stop's going to be above the swing. Never close above the swing at all. And it just got taken to the woodshed. Now, what did it do? Came back up into the sell zone again. We're still red entry candle. Came right to the sell zone inside my 25 sell zone. So let's go all the way today because we're looking to only short. Now, this is a counter trade because it turned green, the trend filter, and I had some 25 buy zones turning green. But do you really want to take those trades? No. Why? Look at my 2-hour chart. It's southbound on the Greyhound ever since 8 a.m. yesterday. They are smoking this market to the downside. So what do you want to do? Keep selling retracements inside the zone or do the yellow trigger. Wait till it turns back red again. Now we're in a great environment again. So look at the push versus the counter push. Here's a small little counter push up. Now look at the push down because you're going with the big trend. Got inside my 25 sell zone. This is a good entry right there. Sell, sell, inside the 25 zone, sell, inside the 25 zone, sell. So you can see inside the 25 zone, sell right here again. Beautiful sell zone because you're going with the big push. So that little counter trend trade it did, that's okay. We want to take that reversal, came right up to the edge of my 25 zone. That's how important those line in the sand is. Caught right to the edge. That was a nice trade yesterday at 2:30 Eastern Standard Time. 67.68 3/4, all the way down to 45. Over 20 S&P points again, right up to the sell zone again. This got outside the sell zone, so it's not a trade. And then it reverses again. It turns green. So what do? Stand aside. The market's in a downtrend. Stand aside. Wait till it turns red again. Get back short. My sell zone caught it right there perfectly on that trigger candle. If you are a European trader, 1 hour before the London Open, caught that big move down. Another big trade here this morning. Right there at, what time was that? 3 o'clock, 7 minutes after the London Open. Caught another big one. And then it stopped right at, because you're shorting, it stopped right at the sell zone at 5:54 this morning. Another short at 7:03. Another short at 7:32. Another short at 8:12. Now we're back in the sell zone again. Are we going with the push? Yes. Is the market going down? Yes. How far can we take this sell? We can't let it violate the high of this 25 sell zone. That's our proprietary 25 sell zone. It cannot close above 99.5, which is kind of ironic because 6,700 used to be the 50-day moving average on the daily chart. I went over that about a week and a half ago. So this is now a ceiling. 6,700 hold numbers becoming a ceiling. This could be a big shorting opportunity coming up for us right here. It's coming up before the market opens up at 9:30. Another big possible zone. As long as that zone holds, I'll put the zone out. As long as the zone holds, we'll see if we can get a push down there. We should work our way down to that 55 3/4 level. Okay? That's how you put it all together, guys. Put it all together by seeing what the big picture is. What's the big picture? Big picture, we're going lower. Big picture on the daily, it's breaking key support. This will be interesting, though. The next 2 days will be interesting in the market. If we close two candles close below the 50, we haven't done that since May 1st. Interesting. We're in a neat little environment in the market right now, guys. Whether it be you own stocks, Bitcoin just broke 100,000. Whether you own crypto, whether you own stocks, I mean, whether you own gold, gold's pushing seriously high. You know, silver. I mean, it's just we're in such a neat environment for volatility. I mean, you got all these catalysts just pushing this market around, and that's exactly what you want.